Interest on capital. What is capital? The funds that were raised to support a business or for a project are called as capital. It is the wealth of a business gathered over a period of time. It is calculated by capital is equal to assets minus liabilities. Capital can also mean ownership in a firm. Interest on capital. Interest on capital is the amount payable on the additional capital to the partner. It happens in the business at times. A businessman wants to know the profit of the business after giving the interest on capital. The interest is calculated at a given rate of interest of capital in the beginning of the accounting year. If suppose additional amount of capital is added in the business during the accounting year, then the interest on capital will be calculated on that amount from the date when it was added to business. Interest on capital is treated as expense of the business and the entry would be done as given. In the final accounts, it is shown as expense in the debit side of the profit and loss account and added to capital in the balance sheet. For example, we assume that Rahul decides to give 5% interest on capital. The amount of interest on capital in that case would be 5% of 12,000, that amounts to be 600 rupees. The interest on capital would be, in the balance sheet, it should be added into the capital. The adjustment would be done as done in referred image.
For more such videos on all subjects, practice questions and a lot more, download iPrep and learn unlimited.